Hello and welcome to another episode of Monday Markets. As always, we are brought to you by Woo. Links available in the description below. There are two interesting things there. First is their end of year report. The second is the $1 million trading competition they've got going on. Ordinarily, when you hear $1 million trading competition, there's always some caveat cringe thing attached to it. But this one is actually pretty straightforward. And because it's not a mega massive exchange, I think your odds of performing well are higher than they would ordinarily be. There's a volume-based component there and also an ROI returns component. So that's quite fun. If you want to check it out, feel free. If not, then don't. I mean, it's your life after all, but it's one way of supporting the show. Do not leave any more money on an exchange than you need for trading. The whole point of leverage is to reduce counterparty risk, even if you're punting the competitions. So with that out of the way, we have 2 weeks left until the monthly close. I don't think the monthly close is going to be printing a swing long setup at these levels. This is for two reasons. The first reason is technical. We are approaching and trading in or around this monthly cluster of resistance at 44 to 47. It's a sort of intermediate level of resistance. It's not amazing. It's not a super clear range higher inflection point, but it's relevant nonetheless. And I think more relevant than that is we only have about 2.5 weeks until the expected spot ETF deadline for BTC. And so there's sort of headline potential, sell the news, de-risk into the event type of risk associated with it as well. So the technical argument is not clear and the headline risk is clear. So if you're looking for monthly timeframe swings, which take 2-3 months usually, if not longer, then I don't think that's going to be available until the post-ETF era. Realistically, with the monthly time frame, the best setups come from buying monthly support. The last instance of that was this wick here into the monthly level at 19. Arguably, there was a monthly setup on the breakout of 29-30K. And if you really want to reach for it, a monthly setup in the breakout of 35K from 37 to where we are now. Those are all valid, but my favorite approach to the monthly is to buy monthly support. And if that's your view, then the area to do that is 35 to 37, and it's not at 43 to 47. So that's just something worth bearing in mind monthly time frame wise, but unsurprisingly hasn't done all too much yet. The weekly, I think, is quite interesting. We finally had a red week, and we haven't seen that in a while. If you look at this streak from pretty much the 30K breakout, it's been green candles only. And even this red candle at the moment isn't particularly scary. As far as where we are on the weekly, it is a bit of a tricky area. I don't think this week necessarily broke much or did all too much. Realistically, if you assess the damage done by this weekly, it didn't even spike the bottom of the sort of wickless looking weekly candle below it. So, you know, the damage was pretty contained. There is one level that I'm watching on the weekly to see if we're going to get rugged into the monthly close and if the selling is going to continue. And as you'll recall, we sort of covered it in passing when we were talking about the mid-40s area. And it's this weekly cluster between 41.8 and 43. I think if the market is going to sneak up on us with some weakness and continue to trade lower and have another red week, I think it'll be off the back of this 42 to 43K area. The argument would be that this was resistance. We sort of overshot it, closed below, and then the next 1-2 weeks are going to be the retest weeks. That's purely technical. Again, with the spot ETF stuff, it's very back and forth. You can make arguments that there's not going to be a big seller in the market because they're going to wait for approval and dump on that pump. Alternatively, you can argue that there's just not going to be a big seller in the market and the ETF is going to send prices higher. It's pretty tricky, but purely from a technical perspective, without overthinking all the potential narrative implications, I think 42-43 is your best and only weekly area that's relevant for the next week of trading, given we'll have another show the following Monday. As far as weekly support and all that jazz, again, on the monthly, it's 35-37. I'm not sure there are particularly great levels on the weekly that are worth paying attention to. You have to start going pretty low at around 32K. Maybe if you're very conservative, if you're very aggressive rather, 36K as weekly support. So 32, 36, we know that has some overlap with the monthly, but there isn't a lot of weekly structure worth paying attention to on the support side in the 40K area. I think that's just a bit too close to the market. So realistically, unless the market gives a big pullback, the only weekly areas that I have on my chart are 42, 43 in the short term. And if we look on the daily time frame, I think we're starting to see some evidence of a sort of market structure shift or a break. It's not super decisive yet, but if you look at the last couple of weeks of trading, we essentially had this push into 44K, which is a non-trivial level. And at the moment, when the market essentially retested the breakdown, low, lower low on the daily time frame, that's where it found resistance. So realistically, if you're looking for a daily time frame trading range for your short-term punting, the extremity is the lowest close at 41.2, and the other extremity is at the point of breakdown at around 43.3 or whatever that is, and that's what we're dealing with on the daily time frame at the moment. Unsurprisingly, the H4 shows a very similar view. You know, if we zoom out and eyeball this thing, that's your support turn resistance, and this is sort of where the lows came in, and that's essentially what we're dealing with. Again, my low time frame views are fairly low conviction because of the absence of high time frame supports and also the looming sort of narrative risk. So I think that's why, understandably, a lot of the market has been altcoin punting or even just short-term trading BTC, if trading it at all. I think that's understandable given that, you know, the headline risk is looming and the higher timeframes aren't printing sort of confluent, concurrent setups if you're interested in high timeframe swing type of stuff. There are fun lower time frame things going on. For example, we had a couple of wick refill setups, which are always quite fun. We've spoken about them on the show before. We have a big wick in the market that closes by definition quite far away from where, sorry, the wick is far away from the close, basically. That's why there's a big wick. And then the market just fills that wick back in and trades back to where the low was printed. We've seen that on a couple of occasions now. So if you look at this wick, we traded back into it. You see this wick, we traded back into it as well. And that gives a bit of a squeeze, short-term bounce, reversal type of setup. So those have been interesting. But that aside, you know, understandably, if you haven't paid any attention to BTC, you'd be forgiven for doing so, given that altcoins and especially meme coins have been much more interesting, but I'm not very good at trading those. So what use is this show, he says, clicking the red X and going to watch something else. Nonetheless, that's more or less BTC. I still think that the headline risk is non-trivial. I would, you know, I will be very wrong if the market just essentially stays bid into the ETF and post ETF and never just really sells off. We just keep climbing higher consolidation, till we break all-time highs and the ETF narrative takes us there. That's certainly possible, but it's not my base case. So, you know, if I'm wrong, I'm wrong, I suppose. But short-term trading has been okay on this thing. Realistically, on the daily time frame, that's really the only time frame showing any sign of weakness. I mean, the monthly we know is at resistance, but this shit can take ages to percolate. Whereas the daily time frame is the first one where you're like, okay, this is slightly different than before. If you want to be an aggressive daily time frame bull, it would either be at the range lows for a short-term technical bounce or structurally pretty much back above 43, 44K. That would then nullify the potentially dodgy looking weekly and also give you a positive daily break in market structure. So that would be fairly constructive. I'm still paying attention to the range we described and the consolidation specifically that we discussed ages ago. I don't know if it was the 2-day or the 3-day, but it's more or less the same level. Where is it? Before I forget completely. Yeah, so this is when we had the discussion on Casual Friday around BTC being the same price as when the Lunar Foundation Guard was buying it before the entire industry collapsed. So essentially between 37K is the range low, and we had about 44.4K as the range high, which ended up being a nice resistance level. And then we have a midpoint from that same range at 40, whatever that is, 40.5K, which is also where the market's been bouncing. So that's quite nice that the market has been respecting those technical levels. So if you're looking for higher time frame, but not so higher time frame, sort of daily time frame directional bias, I think those are your best levels realistically. 40.5 range midpoint, sort of 44 to 44.5 range high. And then if we get a larger correction, unsurprisingly, the first port of call is 37. And in that area, especially if we start wicking, we know that we're going to be reaching monthly and weekly resistance levels as well. So that's most of BTC. I want to add some contextual commentary, which is that if you look at dominance by open interest, altcoins are really up there. You know, by historical levels, by recent levels, just been a steady climb in altcoin speculation. I would also add that this doesn't include the CME. So the just net open interest in crypto is a lot higher than it has been in the past. But also on the altcoin side, this won't include a lot of the on-chain stuff that's going on. I'm sure a lot of the DEX stuff as well isn't necessarily measured by this. But in general, when you see this amount of altcoin dominance, you're not particularly early on that front. So it tends to be more of a kind of red flag potential risk signal. The reason for that is when the market just goes balls deep altcoins, especially on the tail end of a Bitcoin driven ETF narrative, those types of participants tend to be more leveraged and just enter the market at worse times, and they tend to create and be a part of liquidation cascades and washouts or whatever else. You know, they come in late, their leverage is high, so when the market flinching causes them to sell very sloppily, and if there's a lot of them selling very sloppily, that can result in larger corrections, especially in perps, than you would otherwise get. So by no means some mega doom signal, just one of those red flag-ish type of things worth bearing in mind. So that's kind of where the high time frame argument comes from. Like you have the market balls deep in altcoins, and a headline risk in the form of spot ETF, with the potential at least to be a sell the news event to some extent, or a rebalancing event at the very least in the next 2 weeks. So we're being sort of compressed on the altcoin risk appetite front, and also being pressured on the proximity to the deadline front. So if you're a conservative boomer, you kind of look at it and think, I'm just going to short-term punt, if anything, because the swings aren't there for swinging. And I think there's anything else particularly pertinent here. That's really the main thing, and that's BTC. So hopefully that makes sense and is of some help. On the ETH front, ETH BTC has continued to underwhelm and be weak. You know, we had a period of consolidation here for about a month or so around 0.55, where the argument was, hey, maybe this is just going to consolidate post breakdown and move higher. It hasn't done so, and even though we've had a very frothy alt season, it's kind of been everything but ETH froth season, which is very unfortunate. Historically, ETH has been a useful barometer for altcoin risk, and you know there's a sort of steady progression as far as the risk curve goes, where BTC goes first, then it goes to ETH, then it goes to the high caps, then it goes to mid caps, and then it goes to low caps, then it goes to meme coins, influencer pump and dump schemes, whatever. That framework, I think, and for a while now, as we've discussed on Casual Friday in the past, I think it's somewhat archaic, especially absent the large retail inflows that we're used to. The risk curve kind of looks like BTC, and then you blink and you're balls deep some Celestia fucking inscriptions or something. So that gradual progression that we're used to as far as risk taking doesn't really exist anymore, and the market will just straight up leapfrog certain assets, certain narratives, or whatever else, and that has been at the expense of ETH. I think Don just made the argument very well, even weeks and months ago, as far as ETH being the mid-curve argument, where you have a lot of strength in BTC because it's obvious, a lot of strength in the meme coin far out on the risk curve stuff, because that's where the kindred spirits go. But then ETH is the sort of neither, as we say in Russian, ni v pizdu, ni v krasnu armiu type of trade, neither here nor there. It hasn't really been the beneficiary of these animal spirits. So yeah, ETH BTC still looks breakdowny, not much else to say there. Same levels as before. If you want to be really aggressive with it, 0.55 to 0.57 range low reclaim would be nice. As before, as argued in Technical Roundup, the newsletter, there could be an argument for a rotation in favor of ETH once the Bitcoin spot ETF is over. Then you can make the argument that ETH got oversold and under-owned because of the magnitude of this narrative. You're either trading BTC or you're trading meme coins. But now that the BTC narrative is over and meme coins are cooling off, maybe now you'll see value return to ETH. I think that's the most plausible argument for an ETH rotation. I personally don't find it super compelling. My view is that it's more likely that the rotation trade, in at least how it's being projected, doesn't come in sort of January or whatever else, and actually we get a larger repricing correction across the board before outperformance later in the year. But I could be completely wrong on that, and this is just one of those random projections, prognostications that doesn't mean anything. So as far as catch-up trade goes, if it's going to happen from a TA perspective, at the very least above 0.56, 0.57, as from a flow, timing, narrative perspective, post Bitcoin spot ETF, if that doesn't lead to a sell-off, that's probably your best window. If that doesn't do it, then nothing can, really. Or at least you've given it every chance to go up from a technical perspective, a narrative perspective, a flow perspective, whatever. And if ETH doesn't take that chance, then it's worth letting it go as low or underperform as much as it needs to before giving a larger bounce. The ETH USD picture doesn't look frightening yet. I would say that there is evidence that the breakout is weak because it just came back and retested the level straight away. So to be clear, it is at weekly support at 2.1k. But if you compare Bitcoin's breakout from its range high compared to ETH's, we had one breakout week, 1 week of upside, and then we're straight down and have returned to the retest level. So as long as it sort of gets bought up quickly, that's okay. It's not concerning from a technical perspective. If you want to be conservative from a candle close point of view, a weekly close below 2.1 would be, I think, quite bad. At that point, that just looks like a sort of frothy failed breakout, and then we're sort of back inside the range type of thing. That would be bad, but that's not available at the moment. It's more of a, why would you want to be long this thing if ETH BTC looks like this and ETH USD can barely hold a breakout? And that catch-up trade, the mythical catch-up trade that's been advertised a lot on content, social media, etc. It's just been quite underwhelming. And again, maybe in 1 or 2 weeks, this whole post-Bitcoin spot ETF flow narrative comes to fruition. But for the time being, we don't have that evidence in front of us. So short-term trading, 2.1, that's your sport. Sure, why not? If you're going to get swing bearish this, I think below 2.1, it starts to look a bit shit, to be honest. That's really all there is to say there. I mean, this is fairly technical as far as that kind of stuff goes. And on the altcoin front, I've mostly been paying attention to watch lists via Velo. And, you know, they constantly update this, and I'll usually go either by 24-hour volume, 24-hour price change. Sometimes I will go to the, where is this? The market tab and look at the open interest changes in usually the large caps, but sometimes I'll look at top gainers, top losers. Liquidations are also a good one to look at if you have access to that. But really, open interest changes and price changes tend to highlight the important stuff, or just going on the watch list and sorting by 24-hour change. If you know that's probably the better way to find altcoins to trade on like a daily basis or for day trading purposes. Because again, there's no real rhyme or reason or theme to the rotations. And to be honest, a lot of it is now, at the time of recording, moved away from the liquid the liquid centralized exchange listed stuff, and has gone more towards meme coins and on-chain trading. So that also, is a completely different paradigm at that point. Yeah, that's all I have to say as far as BTC and ETH. I think the technical levels are fairly straightforward. I'm not compelled, or not convinced rather, that there is a clear high time frame swing trade to be taken from a TA perspective. If it dips further, there will be. Alternatively, if you're swing long here, I think the only reasonable / defensible thesis is that the spot ETF will be approved and it will be bullish, and the inflows will start very quickly, and it's just a momentum trade all the way to the range highs and all-time highs. I don't think it's a totally absurd argument. It's not my favorite argument, but if you're going to make one, that's essentially what it has to be. Absent that, if you're sort of sidelined waiting for something high time frame to print, even in very sort of secular cyclical uptrends, the market will correct 20 to 40% on BTC before making new highs type of thing. And so if that's your strategy, then you just have to wait for that and have to be price agnostic. So whether it happens from, 44 to wherever else, or from 50, or from 60, or from 70, that same 20 to 40% wipeout setup is probably worth trading, and you just have to be price agnostic if you're willing to be patient. Yeah, that's all I have to say. Hopefully I'll develop some clearer views post Bitcoin spot ETF, but I just don't think it's a particularly important place to feel rushed. We have the Christmas potential volatility lull coming up, all sorts of weird year-end flow meme narratives coming up. Altcoins are on the extended side, given the dominance by open interest that we looked at, and dominance by volume, but to a lesser extent, given that's a bit of a messy metric. And I just think at this point, given the amount that we've rallied from the spot ETF narrative, given how close it is, and it happens to tie in with all this year-end shit, and we don't have the high time frame mega technical support stuff going on, I think if you're short-term trading, fine. If you're looking for high time frame swings, I think post-ETF, it's a better time to do that. It's a bit boring, but someone has to be boring, and I will happily take on that mantle. Let me know if you have any questions. Hopefully that was somewhat helpful. If not, I guess I apologize. But thank you to Woo for supporting the show. If you disagree with me, go trade that $1 million competition, make $1 million, and then tag me every day, calling me all sorts of inappropriate and offensive terms. That's fine. I won't object. Have a wonderful week. Newsletter tomorrow at trletter.com. Casual Friday, kind of a Christmassy episode. I'm sure that will be fun. But for now, that's really it. Thanks for watching. Have a wonderful week, and see you soon.